Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Garden Reach Shipbuilders and Engineers has emerged as a linchpin in India's maritime defense infrastructure. The company has successfully blended centuries old shipbuilding expertise with cutting edge technological innovations. Their recent quarter four performance, in addition to a massive 25,000 crore contract for building the next gen Corvettes. Now, Corvettes are basically small warships, has catapulted the company at the forefront of India's naval modernization agenda. Today's analysis delves into the financial health, order book dynamics, future prospects, industry positioning of the company, offering insight into its role in shaping India's maritime future. India's maritime defense expenditure is expected to surpass $22 billion by 2030, driven by the need to counter regional security threats and secure vital sea lanes. Garden Reach, which is a Ministry of Defense PSU, has built 111 warships till date since 1960, including 70% of the current Indian fleet. The company's recent foray into green warship technology and AI driven ship design underscores its alignment with global sustainability trends. Notably, Garden Reach has constructed Asia's largest modular steel bridge and delivered INS Sandhayak, India's largest survey vessel, showcasing its engineering versatility. Now that we have seen the background of the company, let us shift our attention to the financials. What were the Q4 and whole year financial results that the company declared? Firstly, we'll look at Q4 results. The revenue of the company in the fourth quarter surged 61.66% to reach 1642 crore rupees. EBITDA margins improved to 20.4 from 16.3% in the quarter 4. Now these figures are year on year basis. EBITDA reached 335 crore rupees. Profit after tax soared a whooping 118% to reach 244 crore rupees. Earnings per share also doubled, more than doubled, to 21.32 from 9.74 year on year basis. Looking at the full year performance, well, revenue crossed the 5,000 crore mark for the first time. It reached 5,076 crore rupees for financial year 2025. Now, this reflected a growth of 41.28% year on year basis. Profit after tax grew 47.62% year on year basis to reach 527 crore rupees. The 5-year CAGR growth was recorded at 26%. Dividend was declared at 138.5%, up from 93.7% in 2024. Balance sheet maintains its debt-free status and reserves swelled to 1965 crore rupees. So all in all, a very good performance, a very good result when it comes to the financials of the company. Now, the company being in a capital intensive industry, let us focus our attention on the cost structure. Now, the material cost surged 124% year on year basis in quarter 4 due to steel price volatility and advanced weapon system procurements. Employee cost increased marginally by 3.04%, showcasing workforce optimization and scaling operations. It is important to have a look at the order pipeline of the company. Why? Because it ensures future income stream for the company. So as of March 2025, the company's order book stood at 22,680 crore rupees, spanning 18 warships and 4 export projects. The NGC contract that the company has received for 25,000 crore rupees for 5 stealth corvettes. Now, corvettes, as I've already told you, are small warships, will enhance anti submarine and missile defense capabilities, contributing to nearly 5,000 to 6,000 crores annually from the next financial year. So, financial year 2026 will see these income streams into the company. The export orders include 8 multi-purpose vessels for Germany and a dredger for Bangladesh, reducing resilience on domestic defense. There are also several upcoming massive opportunities which can materialize for the company, like the P-17 Bravo frigates. Now, the request for proposal for this contract is expected in 2025, and the project is worth 70,000 crore rupees, where the company will be competing with Mazgaon Dock. It is already building a ocean research vessel for NCPOR, expanding into scientific maritime infrastructure. These kind of massive orders can be a huge revenue generation opportunity for the company. So basically, now let us have a look at the growth drivers. What is set to drive growth for this company in future? Firstly, India's naval modernization efforts. India plans to induct 175 warships by 2035, with GRSE Garden Reach targeting 40% of upcoming contracts. The NGC project will contribute 12 to 15% of the company's revenue through financial year 2030. So, for the next 5 years, the GRSC project of 25,000 crores will ensure a revenue stream of annually 5 to 6,000 crore rupees for the company. The European market expansion, where the company has received German contract for 8 vessels, which is worth 4,400 crore rupees, opens door to NATO aligned nations. Also, despite Bangladesh's 179 crore tug cancellation, Garden Reach retains orders from Mauritius and Seychelles. Technological edge is also one of the cases in favor of Garden Reach. Now, its NGCs will use LNG compatible engines and waste heat recovery systems, reducing carbon footprint by nearly 30%. The GAINS 2024 initiative fosters robotics and AI in ship design, cutting production timelines by nearly 20%, thus saving cost for the company. Capacity expansion for its operations is also on the cards. The Kolkata facility is adding 4 dry docks to handle 28 vessels annually by 2035. The company is also planning a 2,000 crore shipyard for 300-meter commercial vessels, targeting Middle East and African markets. So, is the company risk free? Being a government company, is there no risk involved in the business? Well, no business is without risk. So, in case of Garden Reach, primarily one of the prominent risks to pay attention on is the execution risk. Now, historical delays in ASW crafts, which are now 85% complete, highlight the supply chain vulnerabilities of the company. Rising steel prices, which are up 22% since 2023, could pressure margins if not offset by escalation clauses. The company also faces competition pressures. Mazgaon Dock's P-17A frigates and L&T's submarine expertise threaten Garden Reach's monopoly in small warships. How does the valuation matrix look? Well, the PE ratio of a Garden Reach is currently at 60.4. It trades at a premium of 57% to sectoral average, demanding flawless execution to justify such high premium. The price to book ratio stands at 19.4 versus the industry average of 6.71, which reflects market optimization but raises sustainability questions. Will it be able to justify such high premium is what is the question. The return on equity ratio for the company stands at 28.1 in comparison to 22.5 of Mazgaon Dock. Dividend yield is at 0.34%. The return on capital employed is 37.3, which outperforms its peers. But its premium valuation hinges on securing the P-17 Bravo frigate contract and delivering the 25,000 crore NGC order. To conclude, Garden Reach is at a pivotal juncture, leveraging India's indigenization efforts and expanding into global commercial markets. The 25,000 crore NGC contract, along with an impressive financial year 2025 performance, showcases its execution capabilities. In spite of this, challenges of high valuation and project execution delays persist. Investors should monitor if the revenues reach 10,000 crores by 2028, which requires 20% annual execution growth. whether the company is successfully able to penetrate the European markets, which could help diversify revenues beyond the cyclical defense spendings. AI and robotic implementation that the company has undertaken will be critical to maintain its margin amidst wage inflation and raw material price surges. To end this presentation, let me quote Commodore P.R. Hari, the chairman of Garden Reach. He says, our order visibility extends to financial year 2027, with commercial shipbuilding becoming a second growth pillar. As India sails towards becoming a 5 trillion economy, today, if you have read the news, we have surpassed Japan to become the fourth largest economy in the world. So, yes, we are right on track to reach that 5 trillion target and surpass Germany. Now, amidst all this, Garden Reach's ability to blend naval prowess with sustainable innovation will determine its voyage from domestic shipbuilder to a global maritime titan. These were the words of P.R. Hari. If you have liked this video, I request you to share and subscribe to our channel for more such informative content. Let me hear from you about your thoughts on this particular stock and where you think the stock price can go and what is an investable level. As always, this video is for educational purposes. This is no stock recommendation. It is advisable that you approach an investment advisor for the right investment advice. Until next time, stay safe and goodbye.